market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, in a moment, we'll be joined by John Bilton from JPMorgan Asset Management. But first, let's also bring you up to speed as the latest on tech as the chip sell-off is deepening. We're joined by Shona Ghosh, our EMEA tech editor, and Matt Bloxham, senior strategist with Bloomberg Intelligence. So thank you both for joining us. Matt, let's start with you because SpaceX shares falling pre-market after this planned launch of Starship mission was scrubbed. So how big of a setback is this?
It's definitely a setback. I think at this point it's a small one. Just to put it in context, Starship is the next generation rocket launch platform. Will take over eventually from Falcon 9, which is their workhorse. It has at least 5 times the capacity of Falcon 9, and it's central to SpaceX's big plans to grow revenue and expand into AI in a really big way, because they want to create this orbital data center network, and they can only do that if they've got Starship as a kind of reusable launch platform. So it looks like it was just a bit of a small glitch with the rockets. Not all of them fired, and that they'll kind of get it off the ground in a few days. It's going to have a number of version 3 satellites in it, which is the next generation of their Starlink satellite, and that's a kind of precursor to the technology they'll think of using for the orbital data center. So there's a lot riding on this mission. I think if eventually takes off and goes well, then I think actually it'll end up being a positive catalyst for the shares, because it'll demonstrate that they're taking these steps forward towards this kind of vision they've got for the future.
Okay, so that's SpaceX. I mean, Netflix got battered, actually, after earnings overnight. What were your main key takeaways?
Yeah, a few things underpinning that. So, the broader picture is that the story is artificial intelligence. Obviously, investors swing here and there in terms of sentiment there, but, AI has implications for the entertainment and content sector, so that's one facet. 2 is that, we've had the World Cup. People aren't really necessarily watching a ton of Netflix, especially in the UK, until this week perhaps, but Netflix isn't necessarily known for having a ton of live entertainment sports on its platform. I think we'll see that shift. And then finally, Netflix has historically been pretty transparent about user data, the number of subscribers it's got, its growth, and particularly engagement. There have been signs that engagement is falling, and yesterday Netflix said, actually, we're going to reduce the amount of information we give to investors around engagement. Understandably, it got punished for that. Yeah,
investors don't like that. Also, we had a bit of a hiccup at Google, which has delayed the new version of Gemini. So, I mean, when you look at also what President Xi is saying on AI progress, should Silicon Valley be worried?
I think Silicon Valley already is worried, yeah. So the big thing that China has to offer in terms of frontier AI is one, how quickly they're able to catch up with the cutting edge of technology, and even really if it matters to be on the absolute cutting edge. Like, your average person doesn't need the absolute top of the line model. China is able to offer these alternative, what they call open weight models, so slightly sort of less closed kind of technology, for much cheaper than the open AIs and the Anthropics. So that's likely in time to cut into their bottom lines, and these companies aren't even public yet, so this has implications for revenue. So yes, I think China's progress is definitely a worry, even as these companies all vie amongst themselves to stay at the cutting edge. Yes,
so there are plenty of things to worry about. Is there something else underpinning the sell-off?
And you mean generally in the tech? I mean, I think there's a bunch of things going on here. I think in some of the Asian markets, there's like a technical element here. You've got these single stock leverage ETFs, which have, I think, magnified some of the kind of sell-off pressure. And I think valuations had run up a lot, share prices run up a lot, and perhaps got a bit ahead of where the fundamentals are right now. And I think really what we've seen in the recent earnings, although they've been pretty robust from Samsung, TSMC, SK Hynix, there's not been an incremental leg of kind of fundamental positive news. And so when you've got stocks priced to some degree to perfection, without that incremental catalyst, then you start to kind of run out of momentum. There's also a lot of chat about whether the AI story is as robust as the share prices might suggest. So, for example, token maxing, there's a lot of enterprises out there struggling with budgets and whether they should start to kind of manage better how they're spending on AI. So I think that is also kind of a big factor going on that's kind of causing people to think, hey, we need another kind of tangible positive to push these shares higher, and that's, I think, why you're seeing some rebalancing.
Okay, thank you both, Shona and Matt there. Shona Gosher, EMEA tech editor, and Matt Bloxham from Bloomberg Intelligence. So earnings season kicking off on a strong note, but as we've been hearing, it's all the tech that's being put under pressure today. So joining us now is John Bilton, Global Head of Strategic Research for Multi-Asset Solutions at JPMorgan Asset Management. John, so good to have you. And on a day where actually, there are days like this where you see a bit of a sell-off because people worry about tech, usually it bounces back, but could it be different this time?
Well, we've been living with this for more than a year, haven't we? This hyperscaler hyperbole seems to cut both ways. It's either driving the market up or it's driving it down, and there seems to be very little in between. But if we actually sort of pare it back a little bit, let's look at what's happened under the surface. One of the things that really interests me is some of these chip makers. If you look at the Philadelphia Semiconductor Index, it's just edging in towards technical bear market territory. It looks pretty bad. But actually, if we look at what's happened to valuations, they've dropped by a quarter, while the index has dropped by 20%. The only way that happens is if earnings are continuing to go up. So what we're seeing is that earnings are coming in, but for some reason the stocks aren't getting supported. What seems to be going on really is that we're seeing this move away from momentum and towards something where things are a little bit cheaper. These stocks have got expensive. But crucially, dig into those earnings reports and what do you see? Commitments to faster growth, more capex, and of course when you've got a situation where we're beginning to realise that AI is an industry, not a service, and we've got to pay to build it, then all of a sudden investors are taking a different lens, and rightly so. And I think that's what's going on at the moment.
John, what part of the market do you still want to be invested in? Because to Shona's good point, not everyone needs a Ferrari, right? You don't need the latest model. You could have something which is cheaper, which companies can integrate just as well.
Well, I think there's an element of that going on already. We've seen some of the smaller cap index in the US, for instance, this year has really accelerated. And some of the biggest names there, of course, were very sort of geared to sort of chips, to the upper end of that value chain. And they're now beginning to rebalance into the bigger indices. So I think we are still seeing that large cap leadership because there's so much capital needing to be put to work that I think you need to have the borrowing capacity. Touch of indigestion at the moment because of some of the big bond issues, but ultimately the cash flows look strong, the earnings forecasts look good, and valuations are simply getting cheaper. Sooner or later, these momentum stocks are going to end up being value stocks.
What happens for European tech?
So I think that's an interesting one. I mean, Europe has got an interesting position here. As we build an industry out, obviously there are, industry champions here. There's also,
In Europe, or are they kind of they're more the enterprise, right? The ones that take the really good stuff and integrate.
There's a bit of both. There's a bit of the machinery, the bit of the end users. I mean, the idea, we saw this at the beginning of the year, right? The idea enterprise software is dead. Enterprise software probably isn't dead. It's just having to rethink and adapt to a new reality. And I think what it does is it will force Europe to raise its game, as Europe has an ability to do. But there are industry leaders in Europe. So Europe's cheap at the moment. It's cheapened up meaningfully. It's where people go second string to think about broadening out diversification in their tech basket. And that matters, because if you look at the chip makers in the emerging market basket, the big three names are getting on for being a third of the market capitalization. We need the diversification. So I think Europe does get caught up with that as well.
Earnings overall seem pretty strong. I know we're just at the beginning.
Yeah.
But does it defy almost, the concerns we have on the economy in a way that makes you a little bit wary?
Not really, no, because I think what we're not seeing is exuberance from particularly households. We've seen households having to adapt. If we break apart what's been going on in the retail sales data in the US, households have begun to drop their volume of expenditure on gasoline. So, some of the concerns we had about that crowding out other spending hasn't really happened. We are seeing productivity pick up, which means that we can absorb a little bit more growth in real incomes. Employment is good. So consumers are kind of a little bit grouchy.
Yeah.
But, they're generally well protected. So a lot of capital going into the market, decent amount of fiscal spending. We believe some big promise from productivity gains into the future. And a consumer who's not exuberant doesn't feel like the mix for the blow-off top in the cycle quite just yet.
But, John, when you look at the U.S., how much is actually, stocks at record highs filtering through the consumer?
Well, there's always going to be a little bit of that. There's going to be a wealth effect. When the index is up, of course, you know, the upper income brackets spend. They feel happier to spend. Yeah. But the thing is, you know, there is, to our mind, there's been a cheapening up of the index because the earnings are coming through. S&P 500 peaked at around 22.5 times. It's around 20.5 times now. A lot of that driven because the hyperscalers, the Mag 7, the big chip names have seen a re-rating. But the earnings are coming through. We are seeing the financials do better because we've got deal activity, we've got general economic growth underpinning that. So as a result, it looks like an economy which is moving along. But make no mistake, it has moved to a part of the cycle where it's driven by spending, investment, and by productivity. And that means with that little bit less reliance on the consumer, quite rightly, investors want to know how their money's being spent and whether it is going to drive positive return on capital.
We'll talk about inflation and the Fed in a second, but is there a part of the world away from the U.S. that you want to be invested in more? And is it emerging markets? They've had a good year. They have.
Well, you know, and we've spoken many times before, and I'm often a little bit dour on my own home nation. But you know, right now, it just feels, if we look at the UK, actually it's immunised from some of this volatility in the tech space. You know, what was an Achilles heel when the market was racing upside? Maybe not so much now. It's geared to oil. But then the gilt market, second worst performer of the majors compared to, you know, with JGBs being the worst year to date. But we're just about to get more information. We've been worried about political instability, and now we're going to get some certainty. Could it be the time when gilts actually have a little bit of a run here relative to other fixed income markets?
John, I have many questions about what you think, you know, the new Prime Minister, but also new Chancellor could put in place. We'll get back to that in a second. John Bilton, Global Head of Strategic Research for Multi-Asset Solutions at JPMorgan Asset Management. Now, coming up, China denies allegations of election meddling from the U.S. president. We discuss what the story means for foreign diplomacy, and, of course, we discuss what it means for the U.S. midterm elections. This is Bloomberg.
I'm seen as disloyal. First of all, loyalty goes two ways. Second, the loyalty that matters is the loyalty of our leaders to the country they represent. Okay. And they're disloyal. Trump has been disloyal to the United States, totally disloyal to the United States. He cheated on the United States with a foreign power. So I'm not the one who's been disloyal.
President Trump, all by himself, without Benjamin Netanyahu by his side, has said the ceasefire is over. Isn't the more honest and direct thing to do hold him fully accountable for his actions as the most powerful man in the world?
I don't think he's the most powerful man in the world. I have held him directly accountable. It's his fault. He's the U.S. president. He was elected. That's his job. And a huge part of the job is resisting pressure from outside forces. I mean, many presidents have, to varying degrees, resisted, you know, attempts to control them from outside. And he didn't. So he's weak.
Tucker Carlson there, who was one of Donald Trump's most prominent allies, and no more. A White House official said no country or leader pressures President Trump to do anything, and he makes decisions based on what serves America's interests. Well, you can watch the full episode of the Michelle Hussein Show on Bloomberg.com/videos, or also listen wherever you get your podcast. It's a really interesting listening, and it's out today. Now, meanwhile, Donald Trump under pressure ahead of the U.S. midterms. Of course, the president is accusing China of interfering with the 2020 U.S. elections. Now, in a primetime address, he repeated unsubstantiated claims that the election was stolen and raised doubts about security of this year's midterms.
The cover-up of this colossal security breach is even more disturbing in light of the additional information showing that China engaged in other election-related activities to undermine my first administration and our 2020 campaign. They did not want, and they just didn't want it. They fought like hell not to have it, Donald Trump, to win.
Well, China denies the allegations and says it will never interfere in the presidential elections of the U.S. Let's bring in Roz Matheson, Bloomberg's chief Asia correspondent. Good morning, Roz. So is this about China, or is it about U.S. midterms, and how could it impact relations between the two countries?
Well, it does come at a delicate time in the relationship. Xi Jinping is due to visit the U.S. in a couple of months, and obviously Donald Trump went to China earlier this year, and the goal behind all of that was to put some kind of floor under the relationship, at least when it comes to trade, to avoid that deteriorating further. And it comes in a clutch of other announcements. We've got tightenings of rules around visas for foreign journalists, particularly Chinese journalists, tightening of the time limits around student visas affecting Chinese students further potentially. And is China happy, or Xi Jinping happy, that Donald Trump raises this in a prime time announcement so forcefully? Probably not. But also they can see, no doubt, that this is aimed very much at the US audience. This is about redirecting ahead of the midterm elections in the US at a time the US economy is obviously facing headwinds from Donald Trump's conflict in the Middle East and other factors as well, and trying to push this narrative again around election security going into the midterm elections. And they'll probably see that really for what it is. But obviously, you know, anything like this can come at a delicate time for the China-US relationship, and it won't please Beijing that he raised it in such a fashion.
Whereas, meanwhile, Trump's media company wants traders and investors to pay for fast access to his posts on Truth Social. So I've never seen anything quite like this. Does his blurring of politics and business have any impact on the U.S. midterms?
There's a lot we don't know about this yet. We don't know what they're going to charge from Trump Media. We don't know. They say they've got companies who are interested. We don't know who they are, when this might start. But as you say, that kind of millisecond advantage potentially for algorithmic trading companies to essentially make money off what Donald Trump is saying. And it's really, again, as you say, moving towards that idea of monetizing what Donald Trump as president is saying for Donald Trump, the businessman, and where those lines begin and where they end. But will that really resonate with US voters? I mean, US voters are already pretty set on how they feel about that question. And obviously it's been a narrative through this administration already. Are they more concerned when it comes down to it, when it comes to midterm votes around things again like the US economy, the state of the economy, the state of jobs, the outlook for inflation? And that's obviously where Donald Trump is showing some vulnerability. Will they go and vote on the day about this issue? Probably not, because again, it just continues that narrative again that we're seeing, the blurring of the lines between Donald Trump, the politician, and Trump and co. in terms of his business.
Roz, thank you so much. Rosalind Matheson there, Bloomberg's chief Asia correspondent. Now, staying with the U.S., softer U.S. inflation has eased expectations of an immediate Fed rate hike as Middle East tensions continue to drive oil prices. Let's return to John Bilton from JPMorgan Asset Management. John, in the last actually couple of minutes, the Nasdaq futures extended their losses to 2%. And then if you look at the U.S.-Iran, I mean, we're in 6th day of clashes, and there's more fears on the markets that this doesn't go away. How do you see this developing, and what does it mean for inflation?
Yeah, so I think first and foremost, if we pick apart the inflation numbers that came through on Tuesday, Wednesday this week, then actually we're seeing that inflation pressures from things like services, etc., are beginning to ease. We're not seeing a great deal in terms of wage inflation, and as mentioned a bit earlier, we're pretty constructive on where productivity goes, which gives that little bit more room to absorb, you know, wage costs. So when you look at the the drivers, of core inflation, they're all moving in the right direction. You know, no doubt, you know, we all want to see the Hormuz issues, you know, put to bed and a line drawn under them. But I think markets are taking them in their stride at the moment. Yet we've got the Strategic Petroleum Reserve is down at its lowest levels. We know in Europe we're running about 50% gas storage capacity against where we'd normally about 2/3. So yes, there are tensions there, but the reserves do exist for a reason. So,
John, I'm surprised actually at how the markets have reacted so far. So I don't know if it was our analysis collectively that was wrong, because we thought it'd have a bigger impact. So did we misunderstand the reserves that they had, or the trade routes that they could take?
Well, I think that that's an element of it. You know, also the energy intensity of industry these days. It has come down. Obviously, you know, notwithstanding data centres, as we build that out, that may bring it back up. But the immediate comparisons that got made at the start of the crisis with 1970s and the industrial chain and inevitable stagflation were probably wide of the mark because of how the economy is constructed today. Also, you know, if we think about what the Fed have done, what the ECB have done, to some degree, they'd probably gotten to the easier end of where they needed to be. Was this a reason to be able to nudge rates back up to what they perceive as being sensible neutral territory? And that may well be what's happened here. In terms of where we go from here, don't forget that when gasoline prices go up and Rosalind just said exactly the same thing. The US voter cares about gas prices, cares about jobs, cares about food prices. You know, if those go up, that slows activity down, which ultimately does have a second-order effect into core inflation. So I think the Fed are smart enough to be able to separate out what could be a short-term move in prices from oil versus what's actually happening beneath the surface. And we feel comfortable that that inflation trajectory at the moment is still continuing to point to the downside.
So what are you expecting from the Fed? Kevin Warsh, it's like a masterclass in diplomacy.
It's amazing,
not saying much, but actually also, I guess he's just building up credibility at the moment.
Well, I think there's two things going on here, because inflation is more volatile. When inflation's volatile, term risk premium's a bit higher, curves remain a bit steeper. If we had a situation where bond yields were coming down at the back end and we were getting cash rates down, financial conditions ease, you've got that kind of go-go injection into the economy. But the back end's staying up. So those financial conditions aren't tightening. The market is doing some of Kevin Warsh's work for him, and he's got the opportunity, I think, to better build his credibility in a sensible way. Hawkish talk, and probably a little bit more of a sitting on hands when it comes to rate decisions. So we don't think that there is necessarily a slam dunk for a rate hike this year.
I'm still gutted about England and the football team, but you're quite optimistic about what the new Prime Minister will do.
Yeah, well, I think in large part because we in the UK have just had a prolonged period of political uncertainty. If you look at what's happened, we've got a relatively soft economy, relatively soft job market, yet leaving aside the JGB, the 10-year gilt has had one of the worst performances this year to date. Certainly, it's now pricing just shy of 5%. It went through 5% yesterday. There's a lot of expectation that the Bank of England will hike. Yet the reality is some of that has got to be a little bit of uncertainty premium. What happens next? If that gets removed, the gilts could actually have a reasonable repricing.
But is there a risk or, you know, an opportunity, whatever you want to call it, for the Prime Minister to go to elections? And does that not bring, again, the markets back in focus?
Well, I think, again, you've got to see what actually happens. It strikes me that the first objectives that seem to be being pushed through at the moment are to try and actually get some party unity. And the fact that I think it was, correct me if I'm wrong, 370 or so of parliamentarians actually said, you know what, we're behind him, that's a step in the right direction. So if he can get a sort of cohesive policy, it may not be everything that everybody wants, but he can get the appropriate trade-offs and get people moving together, then that potentially could remove some of that political risk premium that we've seen probably build up within UK assets.
John, thank you so much, as ever, for joining us. John Bilton,
pleasure.
Of course, Global Head of Strategic Research for Multi-Asset Solutions at JPMorgan Asset Management. Now, just a very, very quick reminder that there are concerns growing that the U.S. and Iran could intensify hostilities into the coming days. Both sides clashing for a sixth straight day, Tehran refusing to back down over the Strait of Hormuz. And then on that, you also have all of the uncertainties, given what we've heard from Netflix, SpaceX, and a bit of a risk-off when it comes to tech. S&P futures down 1%. Coming up, we'll have more on the policies that Andy Burnham's set to unveil on the day he officially takes over as leader of the UK's ruling Labour Party. Yes, it's today. It's Friday. We'll talk about that next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Investors rotate away from technology stocks after their blistering rally this year, with Netflix and SpaceX also weighing on risk sentiment. China denies allegations from Donald Trump of election meddling as the U.S. president turns his attention to the midterms. Plus, Bloomberg understands that Andy Burnham will signal support for North Sea drilling and nationalized water within days of becoming prime minister. So let's get more on this top story. Andy Burnham is set to become the next leader of the Labour Party later today, before becoming UK Prime Minister on Monday. Now, as speculation swirls over who as Chancellor will be, the International Monetary Fund also issued a warning against raising the top rate of income tax. Well, we have a stellar panel to talk about all of this. We're joined by Jill Rutter, the Senior Fellow at the Institute for Government, and Andrade, economist at Bloomberg Economics, and Chloe Chaplain, politics reporter for Bloomberg News. So thank you all for joining us. Chloe, let's start with you. What do we know and what do we not know? Who will be, or when do we find out who the Chancellor is?
The truth is, we'll know for sure on Monday. And I think a lot of the cabinet will also find out what their jobs are going to be on Monday as well. It looks like Shabana Mahmood is now the front runner to be Chancellor. A matter of days ago, Ed Miliband seemed to be a sure shoe-in for the job, and that's changed in the last few days. There were some concerns among Burnham's inner circle that Miliband, he's a huge political figure and he may have perhaps dominated in the Treasury, whereas Mahmood has much more of a blank slate when it comes to her economic credentials and her policies. She's also been very loyal to Burnham. So, it looks like maybe he might be deciding that she's the person to have in the Treasury to be able to, get his policies, his priorities over the line.
Jill, what do we know about Andy Burnham's closest advisors, like who's he's listening to, what are they talking about in the next couple of days?
So he's got people he's worked with in Manchester, who he's bringing in to form part of his team. People have worked with in the last 9 years when he's been doing that job in Manchester. The appointment everybody's been very interested in is that he's brought back former Cabinet Minister, long-standing friend James Purnell. He's done a variety of public and private sector jobs since leaving politics back in 2010. He's going to be his Chief of Staff. That's been a job that successive Prime Ministers, I think, have failed to get right. We saw Keir Starmer swap that job around. Boris Johnson went through Chiefs of Staff at quite a rate of knots. James Purnell is very interesting, former Labour cabinet minister, quite hawkish on things like welfare reform and things, seems to be emerging as a big dominant figure. He's also, we've got some continuity. So Jonathan Powell, National Security Advisor to Keir Starmer, is going to stay on in post. Graham Cook is going to head the policy unit. He's been an advisor in the Starmer government, and it looks as though they're actually offering quite a few of the Starmer people that they can stay on for a bit if they want to do it. So there's a bit of policy continuity there.
Jill, why is it so important to have a strong Chief of Staff that actually sticks around for you?
You really need somebody who can take quite a lot of the burden of being Prime Minister, who can absolutely speak with authority that this is what the Prime Minister wants, but who can also give the Prime Minister really honest, good advice that something is going wrong. Where Prime Ministers go wrong is when they realise too late that they're heading for a real political meltdown. And, Keir Starmer never seemed to have quite the right people around him to say, actually think twice before you do this. I mean, Cabinet Ministers are also incredibly important, but you need somebody who you don't think is a potential rival in waiting or whatever, have absolutely your best interest in heart, but who the rest of government know when they say the Prime Minister wants something, the Prime Minister really does want it.
Anna, what kind of economy does the Prime Minister and the new Chancellor actually inherit? Because on Monday, the hard work starts.
Yeah, I mean, the economic backdrop is not the best. We have currently headline inflation running at 3%. We expect it to remain there for the rest of the year, and that obviously means that the BOE will have very little space to cut policy. So Burnham won't have any help from the economy, and if anything, the risks are that things can get worse because we're seeing an escalation of tensions in the Middle East. If you couple that with the fiscal inheritance, so we're looking at high levels of UK debt, we're looking at a combination of low growth prospects and high interest rates, which is politically toxic for the debt dynamics going forward. And the UK is still paying a premium on credibility. So this started with Liz Truss, but it has eased. That premium has fallen a bit, but it's still around 30 basis points. So the UK government still needs to prove itself to the markets. So fiscally, economically, it will be pretty difficult for Andy Burnham in terms of the backdrop that he'll inherit.
I mean, does anyone here actually have any doubts that he sticks to the fiscal constraints that the previous Chancellor has put in place?
Well, he said that he wants to kind of keep following the fiscal rules and not go away from the manifesto. I think there was some question as to whether if Miliband was Chancellor, that interpretation of what the fiscal rules actually means might be slightly different. And I think that there remains a question mark as to the extent to which Burnham feels that he can borrow more for investment in infrastructure, and he has lots of very ambitious policies around infrastructure, house building, all of these things, whether he can do that without inadvertently increasing the cost of borrowing. That will be, I think that's where the really, really delicate balance is. But there is a question mark over that.
Claire, I love yours. I mean, your story today did make me giggle in a slightly dark way, because you put Andy Burnham's job of disappointing people begins here. So what we know is that he's going to change Westminster by devolving power to poorer regions and redistributing some of the resources. But in the first week, what are his really hard decisions?
Well, he's been speaking very broadly about things like public control, like you say, cost of living, devolution. They're all very broad policies. We reported yesterday that he's been asking officials to prepare for some early announcements on signalling that he's willing to expand drilling in the North Sea. That's something that will help with cost of living and energy security, and move to nationalise Thames Water, whether it be temporarily, and then we know he's looking at a policy of kind of public control of that. So there will be his early priorities in office. Clearly, he wants to hit the ground running. He wants to make an impact straight away. He also won't have much time. The public, we know, are very impatient for change. Yeah. The cost of living is only going to become a more acute challenge and a more expensive challenge for the government to deal with. They're going to be his early, the real hurdles he will have is how in the first 6 months of power he can show he is actually acting quickly. Given we know basically nothing concrete about what he's doing, there are questions as to how quickly can you hit the ground running when you haven't really been able to prepare your ministers or the civil service as to what you're going to be doing.
Can he learn from Keir Starmer's failures? Because there was no crisis actually in the Starmer government. It's just that he did badly in the
problem with the Starmer government was, I think, they fought an election not recognising the fiscal inheritance that they were about to come into, and therefore made some decisions which they didn't sort of adequately prepare for, and started losing support almost from the end of that first month with the decision on winter fuel allowance, so taking away an extra allowance for older people to cope with winter fuel bills. And it was basically sort of downhill almost from there after the initial landslide victory. Chloe's absolutely right. Andy Burnham hasn't had very much time to prepare. Some of the things he wants to do will not show fruit very quickly. So his big theme, devolution of power out of the centre, may be good for the long-run growth of the economy, may make people restore their trust in politics and those things, but it doesn't do that overnight. It's quite a long, drawn-out, difficult process. And you've got to create the capacity in local government to take on lots of those functions that are currently being exercised centrally. I don't think North Sea drilling will do much for the cost of living. It might do a bit for tax revenues. It will be a signal of a different move, but it's likely to be quite controversial within the Labour Party. But we might do concrete stuff on the cost of living, which I think, but then the question comes in exactly as Chloe was saying, is how do you afford that? If the UK's resisted doing anything on energy prices to date. It's not cut fuel duty like some other countries have done in response to the Iran crisis.
Jill, is his first job actually keeping the party together or uniting the party?
I think the party's going to look pretty united because, 4/5 of Labour MPs have nominated Andy Burnham. There's not been a contest. But then the thing that Keir Starmer notably failed to do was not, united the party behind his leadership, but he couldn't unite them for difficult decisions. And the big political test for Andy Burnham is when he comes towards his first budget is, he and his Chancellor, can they actually take the Labour Party with them on some difficult choices that he's going to have to make?
And meanwhile, the Bank of England is looking at this. So they've had, some of the data, inflation growth is actually better than expected, but they also they have to choose interest rates without really knowing government policy.
I think they will have to wait until the autumn to see the contours of the budget that is presented. I think obviously here the risk, as Chloe said, there seems to be some willingness and some appetite to announce some cost of living support. There's two outcomes or two ways in which he can do that. On the one hand, he can announce cost of living support by fully funded plan, so that is raising taxes. On the other hand, he can just borrow more. Something that's more likely to happen is that he lands somewhere in between, where he announces some short-term support for the economy and backloads the consolidation towards the later years, and so delays the difficult decisions. That's something that Rachel Reeves, sort of the approach that Rachel Reeves has taken. And if that's the case, well, for the Bank of England, that sort of means, a little bit of a more boost, something that they need. It might sort of cap the space that they have to lower interest rates. And for markets, it would just mean, less credibility, because this is just a repeat of what we've been getting. No real willingness to tackle, the public finances and the fragility of the public finances.
And were you surprised that we saw a quite sizable gilt move, actually, when the Chancellor was no longer thought to be at Miliband?
I wasn't surprised. I think there was just pricing out the most sort of the worst outcome. I do think that credibility needs to be earned. And again, we know very little on how they will tackle this. I think most of the constraints are actual political, because obviously we don't have a lot of fiscal space, but there's stuff that can be done. The new government could consider looking at the big tax levers. It could consider reforming capital taxes in a way that doesn't undermine growth and still yields revenue. The question is whether they'll actually go for that path or not. But there's still some space to raise revenue. And also, they have been very unwilling to consider the other side of the ledger, which is spending cuts. So there are ways to deliver on growth while keeping public finances and credibility in check. The problem is that the political constraints seem to be, standing in the way right now.
Quite a really, really busy 4 days, even though the Prime Minister, Keir Starmer, will not be at the final on Sunday, which we're all quite sad about. Is there another appointment, apart from the Chancellor, that we should really be looking out for in terms of tone from the government and this new administration?
I think it will be interesting to see who Burnham picks to be the new business secretary. There are rumours in Westminster that it could be Jonathan Reynolds making a return to that beat. Stress, it hasn't been confirmed, and I don't think it will be till Monday. But I think that could be interesting. Of course, who he's going to appoint to run this number 10 in the north, which, again, we don't really know how that's going to function. But whoever has that role, I think, will clearly be in the centre of his devolution plans. And there is also a suggestion that Angela Rayner could return to her old job as housing secretary. That would give her a kind of central role also in devolution plans and signal, I suppose, how ambitious Burnham is prepared to be early on, because she's already been a big driver of devolution previously when she was in the role before she had to step down. I think those are the two appointments I'm most interested in. But of course, it's going to be very fascinating to see what he does with other big hitters like Ed Miliband. If he's not Chancellor, where does he go?
Thank you all for a fantastic panel. I know we'll have plenty more of these panels. Jill Rutter, Senior Fellow at the Institute for Government, and Andrade, economist at Bloomberg Economics, and Chloe Chaplain, Bloomberg Politics reporter. Now, let's also bring you some breaking news. Bloomberg has learned that Germany is preparing core demands for possible discussions with UniCredit over Commerzbank. Now, the move does highlight how Berlin's focus is now shifting from stopping the proposed takeover to help shaping it. Let's bring in Chad Thomas, our executive editor for Europe. So, Chad, this is a very, very significant shift. Can you explain it? What are they looking at?
Yeah, Francine. So Friedrich Merz, the German Chancellor, this week in his summer press conference said that Germany wasn't opposed to a takeover of Commerzbank by UniCredit, but that they were looking closely at what that would mean. That is a significant shift because Germany had been publicly saying all along that they were against this takeover. And really, I think what we're seeing here is a realization by Germany that Orchel, the CEO of UniCredit, has amassed a large stake in Commerzbank. And to block that takeover would be very difficult for Germany. The German Chancellor, Friedrich Merz, of course, also has so much else on his plate. And so now we're hearing from sources that they are preparing to have talks with UniCredit on what a takeover might look like. Those talks haven't started yet, but the German government is preparing to move forward. So this really is a significant shift that we're seeing here.
Does Germany want? Chad, I don't know if you can still hear me. We're trying to figure out exactly what Germany wants or what happens next, but I think we've lost.
Yeah, I lost you there for a second, Francine, but we're back now.
Okay, we're back. So what happens next, and what do we know that Germany actually wants? What are they trying to get out of these meetings?
Yeah, so what Germany is really looking for is assurances from UniCredit that the bank would continue to focus on funding for the Mittelstand companies in Germany. Those are those family-owned mid-sized companies that are so important to the German economy. They also want to see a listing remain in Frankfurt. And, of course, they're probably looking for some sort of job guarantees from UniCredit as well if they were to take over the bank.
Chad, thanks so much. Chad Thomas, our Europe executive editor. Now, coming up, fashion at the World Cup. We're changing tack a touch. How handbags have given luxury a lift. We'll have plenty more on that next. We'll also revisit, of course, that breaking news on Commerzbank and UniCredit. This is Bloomberg. Honeywell Technology says artificial intelligence is driving demand across its business. The company was created after Honeywell completed the separation of its aerospace and automation businesses last month. Now, in the latest episode of Leaders with Francine Lacqua, the chief executive, Kapur, explains why he believes that AI will reshape the way we work.
Where we have seen most impact is more productivity, specifically in the software development and software testing. Transformational will occur if we redraw our work, right, in which we can use agents as part of our workflow. And that requires us to reimagine the work by itself. Look at the steps which an agent can perform, and then the rest of the steps human has to perform. And I truly believe this is another way to drive productivity. What excites me is the opportunity it has for our customers, because we create a lot of data. Our customers have one common issue in the sectors we serve. Mm-hmm. They are short of skilled people. Right. Skilled people required to operate, to maintain, to run, they are increasingly becoming lesser as retirements are coming. So they are already forecasting lesser and lesser people available as a workforce for specific roles. And the only solution is you automate a portion of work, or you make the work performed by a lower skilled people. So it means we have to create more tools so that people are more productive. So a 5-year experienced person can do a 15-year experienced person's role. And that's where the AI, physical AI word comes in, where we are having leadership, that we use the data we created, we have in our systems, and we train the data to perform the task to make our customers' people more skilled, make their assets run smarter, operations run better.
I mean, workers must be anxious about it.
Yes and no. If you are in a segments we serve, there are shortage of people by default. There, the role of AI will be more agentic systems coming in over a period of time. So that's true to every company. But if I look at our customers' world, they don't have enough people to run their operations, maintain their operations efficiently. So there's less anxiety about anybody taking away a job. The more anxiety is what will happen 3 to 5 years from now. Because foundationally, pretty much in the entire world, the population is not growing. The implication of that is 10 to 15 years from now, less workforce is coming into work. So how will work happen in that case when you need a touch labor? So I think displacement will occur where work can be automated.
And you can listen to that episode from Monday wherever you get your podcasts. You can also catch it on Bloomberg TV from Monday, 10 p.m. UK time. Now, British luxury brand Burberry sales have grown across all of its ranges for the first time in 3 years, with strong demand from the U.S. Let's get more with Andrea Felsted, a columnist at Bloomberg Opinion. Andrea, it's so good to speak to you, especially on a Friday. I feel like, we look at tech and then a little bit of fashion. So what's, driving demand at Burberry?
It really is the U.S. That was the best performing region, in line with Richemont the other day. China was also encouraging. So that's more sign that China is perhaps going in the right direction.
So is this a sign that the Burberry, turnaround plan is working?
Well, what was interesting, they've really focused on outerwear, trench coats and scarves. But they said for the first time they'd seen demand grow across all categories: menswear, womenswear, children's wear, accessories, shoes, particularly women's handbags. We know that's a very challenged category. It's also a very lucrative category. So if they can do well in that category, it will give them a boost. I think there's a feeling that Burberry's had a good turnaround, but where does it go from here? You can't just rely on outerwear and scarves. Quite a crowded category with Moncler. Ralph Lauren wants to do more in outerwear, so they really need to get that recovery broadening.
Okay, talking about handbags, don't go anywhere because Sunday's World Cup final pits Spain against Argentina. But on the sidelines, a different kind of battle has been raging because the world's biggest sports brands have spent the tournament fighting for sales and buzz that they hope will outlast the final whistle. Well, we're now joined by Tim Lowe, Bloomberg's consumer reporter. So, Tim, going into the tournament, how did it look between Nike and Adidas in terms of who is better prepared to seize the moment?
Yeah, so when you compare the number of teams that the companies are sponsoring with their jerseys, it was a pretty even split between Nike and Adidas and even Puma. But when you took a step back, you had the sense that Adidas was maybe more prepared. They've been coming off of a couple years hot streak with the Samba sneaker boom, whereas Nike has been really going through a bit of a reset and a lot of problems. Adidas also kind of regards football as their home turf. They've been sponsoring the World Cup with FIFA for, 50 years. And what was fun for me to see was, a month before the tournament started, Adidas had rolled out its big splashy brand campaign, which they called Backyard Legends. A video featuring Hollywood stars Timothée Chalamet, Bad Bunny with Messi, and young stars that Adidas is trying to promote, like Lamine Yamal. And so they were there a month before Nike kind of responded with its own campaign. And so there was a sense that Adidas had sort of done its homework. It was super prepared, and Nike was maybe last minute putting its thing together. But as the tournament has evolved, it's Nike has also, held its own. Changed. In the semifinals, 2 of the teams were Nike, 2 of the teams were Adidas.
So now that we're heading to the final, is it too early to say which brand seems to have won the World Cup, and can they milk it to the max?
Right. No, I think it's pretty clear at this point that this has been an Adidas success story. I mean, you just look at the final. You have Spain and you have Argentina. They're both wearing Adidas uniforms. And you have some of the biggest stars in Messi and Lamine Yamal. They're Adidas players. It's not to say Nike's out of the picture. Okay. They have some really good players on the field who'll be wearing Nike shoes. That said, a lot of talk has been about, the boots on the field have been all pink, whether they're Nike or Adidas in color, so it's hard to differentiate that. So that really, brings it back home to this is kind of an Adidas weekend. And if you're looking out beyond that, there's, Adidas can't really go wrong no matter who wins.
Yeah. Tim, thank you so much. Tim Lowe there with the very latest on the World Cup. And, of course, some of the players staying with the World Cup, some of the biggest names in football, have also been making headlines off the field for their fashion choices. Now, it seems that luxury man bags are the must-have item among football's elite. So Andrea is still with us. Andrea, I love seeing some of the pictures, especially of the French players, because they have so many of the luxury brands. It's like a throwback from the 70s. But, some of the luxury bags have really been stealing the show for men.
Absolutely. It's really been about Erling Haaland and his hacks and his Birkins. He's really raised the profile of Hermes.
So what does it mean? Is this a growing sector of the luxury market? So men handbags, but also sports and luxury are getting close.
Absolutely. Both of those trends, sports and luxury, particularly LVMH has been making a really big push into sport. But for luxury, the handbag has really been, it's been underperforming. It's a real money spinner. It's been underperforming. Men only account for a quarter of that market. So if they can get more men buying these luxury brands, then that's very good news. It could be a new category for luxury.
And they have to be bigger bags, right? Which goes against the trend of the smaller bags.
Exactly. These guys have all been carrying big bags. I mean, that's mainly because they're sort of a super luxe kit bag.
Yeah.
But luxury, it's been all about the mini bag, so we need a rebalancing to bigger models.
Super luxe kit bag. I like that. Andrea, thank you so much. Andrea, you've heard it here first. Andrea Felsted from Bloomberg Opinion. Look, U.S. futures, of course, thinking of 2 things, the Strait of Hormuz with U.S. and Iran, and we'll see, of course, what happens with tech stocks. Tech stocks, as for the moment, they're being slammed in pre-market. Up next, Bloomberg Brief, and this is Bloomberg.